central bank currencies are in essence digital currencies as a medium of exchange. They're probably more threatening to Visa and MasterCard and existing payment rails, right? Visa and MasterCard are payment rails. PayPal, Square, Apple Pay, Google Pay are all working in one shape or form with some of those other payment rails. If I had a digital currency, maybe I could move dollars around on a different network. Maybe I wouldn't keep my dollars in an existing bank. I would move them to the central bank. So stable coin or these digital currencies, they have an impact, but they're probably more threatening to conventional banking system because, when you buy a share of Apple stock or Tesla stock, you're buying it because you don't want to keep your money in cash. And so when the banks give you $1,800 of CBDC dollars, you're still going to make the decision, should I buy Tesla, GameStop, or Bitcoin? Nobody's going to keep it in CBDC dollars. I could keep it in dollars at JP Morgan. I can keep it in dollars at Apple Pay. I can keep it in dollars anywhere, but no one's storing their life savings in dollars. As a general rule, they're moving them either into ETFs, like ARK or S&P ETFs, or they're moving them into stocks, or they're moving them into cryptos because they know that they're going to lose value every year sitting in currencies, right? So the CBDC, the central bank digital currencies, they're not really threatening to Bitcoin any more than they'd be threatening to Google stock, right? They're simply another way to move money around. If I had $100 in the portfolio, every dollar that's not invested in Bitcoin is dilutive to your opportunity, and every dollar that's not beating the S&P is dilutive to your wealth. And so if you really want to maximize your opportunity, you want to move as much of your liquid capital as close to Bitcoin or the Bitcoin network as possible, because it is this monetary network that's going from $1 trillion, and presumably it could be worth $100 trillion or more, because the sum total of all money in the world is maybe $400 trillion worth of stocks, real estate, bonds, and the like. Half of that is looking for a store of value, and the other half, honestly, truly wants to be invested in stocks or bonds or real estate. We've lost price discovery in the financial universe. So the single most accretive way to use money or time is invest in Bitcoin, because you've got a once in a lifetime, once in 50 years, transformation where all of this $200 trillion of money sitting in analog fiat instruments is being encrypted and converted into a digital instrument, which is thermodynamically superior, right? That's the first observation. Time is money. Convert your money into Bitcoin or something as close to it as you can. And the second is time. Well, any time you're spending analyzing, it's like go to Venezuela, analyze every company, every piece of real estate, every bond index in Venezuela, and figure out which ones you want to invest in. And the answer, Angelo, is it's all a waste of time. The only use of time is, how do I buy more Bitcoin? But take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it. And if you've got a business that you love because your family works for the business, it's in your family for 37 years, and you can't bear to sell it, mortgage it, finance it, and convert the proceeds into the hardest money on earth, which is Bitcoin. So what I would say is, use all your time to acquire Bitcoin, finance entities and weaker currencies to buy Bitcoin, or educate yourself on why this makes sense if you're not sure. The most screaming home run idea right now is you borrow $1 billion at 1, 2, 3, 5% interest, and you buy $1 billion in Bitcoin, which is yielding 200% over the last decade. It's a 200% arbitrage. I used the phrase from Archimedes, give me a lever long enough and a fulcrum to place it on, and I can move the world. The fulcrum is Bitcoin. It's the hard point, and the lever is just leverage. And the best idea for everybody is finance your future cash flows in a weak currency and buy a strong asset with them. At the end of the day, Bitcoin is a bank in cyberspace with no more than 21 million units. And the value of Bitcoin is going to approach the sum of all the money that's deposited in that bank, adjusted for the fiat currency inflation rate. And so ultimately, take how much money is in the bank, divide by 21 million. If they did move, it wouldn't matter to me. If they don't move, it's better if they don't. But at the end of the day, there's 21 million Bitcoin. If $1 trillion is invested in Bitcoin, that tags Bitcoin at about $50,000 a coin. When someone buys another $1 trillion worth of it, the price is going up, and then the price is going up based upon the rate of monetary inflation because it's the safe haven. I think that the US dollar is going to continue to be pretty popular. I don't think it's going anywhere. I think that this is just part of the continual trend of companies adopting Bitcoin as a treasury reserve asset. It's really the beginning of the end of, if you want to look at something which is ending, it's the end of gold as a store of value. I think that there's $10 trillion of gold, and traditionally it's been thought of as hard money, and I think that it's dying. It's being eaten by Bitcoin. And so what's going to happen is $1 trillion worth of Bitcoin is going to grow to be $10 trillion, and gold's going to return to its ornamental value as a source of jewelry and the like. And so you got to think of Bitcoin as digital gold. Bitcoin's not going to replace the dollar as the world's reserve currency, and it doesn't need to. I think people get distracted thinking Bitcoin is a currency. It's not a currency. If you know anything about tax, you know that when you move a currency around, you can't afford to incur a tax obligation. So if the IRS is going to tax you when you transfer $1 million of Bitcoin, then it makes it utterly impossible to use it as a currency. On the other hand, it makes it ideal to use as digital gold or a store of value. And that's where I think you'll see it. And what you're going to see there is more and more companies will do this. Hundreds more companies than thousands of companies will do this because it's just a logical base layer for a treasury reserve.